There's one thing I noticed you mentioned on a broadcast, and that was that the Treasury has some sort of report which is blaming wages for the reason for inflation. What's that all about?
Yeah, look, it's quite it's quite extraordinary there, David. Just one more thing, if you don't mind me adding before I get onto that, just back onto the household disposable income. Economist Chris Richardson, who used to work at Deloitte, is quite a very well-known economist. He actually projected that Australia's real per capita household disposable income by 2026 will only recover to just above 2015 levels. So we're currently at 2012 levels, and by 2026 we will have only recovered just above 2015 levels. So this is basically going to be a prolonged period of living standard decline in Australia, whereby even by 2026 we're going to be tracking well below pre-pandemic levels. So look, it's an absolute disaster. But getting back to your point on the Australian Treasury, yes, the Australian Financial Review reported some analysis earlier in the week based on a Freedom of Information request, whereby the Australian Treasury reportedly claimed that Australia's inflation since mid last year has been driven by strong wage growth. Now, anyone who's watching this who's an income earner probably is rolling their eyes at this or wondering how that's possible, because the latest wage price index was released a few weeks ago, up to the December quarter, by the Australian Bureau of Statistics. And that's Australia's official measure of wage growth. And what that showed is that wages only grew by 0.1% more than the headline CPI inflation number. And it was actually exactly the same as what underlying inflation was last calendar year. So what underlying inflation is just the headline CPI inflation adjusted for volatile items. So even based on that, those statistics, we basically had zero real wage growth last year. And once you adjust for the increases in tax paid through bracket creep, which increases everyone's average tax rates, real wages after tax actually fell. And yet here we have the Treasury blaming inflation for Australia's wage growth, which is absolutely bizarre. And as I said earlier, Australia's wage growth before inflation has been amongst the very worst in the world, worse than the US, the United Kingdom and the Eurozone. And it's also worth pointing out that Australia's real wages, once you adjust for inflation, are currently tracking around 2010 levels after falling, basically nearly 7% from their peak. So for the Treasury to then say that our inflation has been caused by wages which are back down to 2010 levels is absolutely bizarre. And one final point, Dave, before I close this out, the Australian Bureau of Statistics released their cost of living index recently. And what that measures is basically, it's more advanced than the CPI inflation. It basically measures the cost of living for various segments of society. And what it showed was that for employee households, that's households with workers, their cost of living went up on average by 6.9% last calendar year in 2023. So Australia's official wage growth of 4.2% was a lot less than employee households' cost of living that went up by 6.9%. So, the bottom line here, David, is that it's absolutely ridiculous for the Australian Treasury to claim that wages are driving inflation. It's clearly not the case. Workers have gone backwards at an alarming rate, and that's been reflected in not just their real wage growth, real wages collapsing to 2010 levels, but also what we mentioned before, the ad break, with Australia's real per capita household disposable income collapsing, amongst the worst in the world. Well, collapsing by the worst rate in the world last year.